Welcome, everyone, to our webinar this afternoon entitled The Webinar Covering the Benefits of the Federal Stimulus Package for the Transportation Industry. My name is Joe Harak, and I'm with the firm Becker LLC, and I'm going to be serving as the moderator today for today's webinar and presentation. What I'm going to do is just summarize the three main topics that we'll be exploring today and talk to you a little bit about the format that we're going to be following. I'll then introduce myself in a little more detail, and then the three colleagues of mine that will be serving as the panelists and the speakers. The three main topics that we're going to be covering today is, first, we're going to be addressing the specific employee situations that may arise under the Families First Coronavirus Response Act, known as FFCRA. Next, we're going to be talking about and discussing the implementation of various new policies and procedures that are required in response to various state government-ordered shutdowns and social distancing policies, including various tools that are relevant to essential businesses, such as transportation companies. Last but not least, we're going to be outlining for the audience the application process for loan funding and requirements for loan forgiveness under the Paycheck Protection Program, the PPP, that's under the Coronavirus Aid, Relief, and Economic Security Act, more affectionately known as the CARES Act. We're probably going to go for about 45 or 50 minutes or so. We're going to try to carve out around 5 or 10 minutes for some question and answers after the speakers' presentations are concluded. And to the extent we don't get to any questions or we can't address them in a comprehensive fashion, we promise to circle back with the people who are proposing the questions and try to get back to them as soon as possible with either an answer or a supplemented answer. Myself, I'm an attorney here at the firm. I serve as the co-chair of the Transportation and Logistics Group. I also am a senior member of our litigation team. I'm licensed to practice in all 4 jurisdictions where our firm has an office, and that's in New Jersey, where we're headquartered. In New York, we have an office in Manhattan. In Pennsylvania, we have a downtown Center City location, and in Southern California. Joining me today as the three speakers are Anthony Vizzoni. Anthony is a fellow member of the firm. He's the co-chair of our firm's Transportation and Logistics Group. He's also the chairman of our Business Services Group at the firm. He has extensive experience and focuses his practice on real estate and corporate transactional matters. Also joining us today is Dave Sprong. Dave is a colleague of mine, a partner at the firm, but a colleague of mine in the litigation department. Dave counsels our transportation clients on a wide variety of legal matters, including compliance and litigation. You'll hear when he discusses various topics that he's been keeping up to date with the rapidly changing legal landscape that's arisen due to the COVID-19 crisis, and he's been guiding our clients on a regular basis through the best practices to come into compliance and avoid liability. Last but not least, our speaker is Chris Letty. Chris is a colleague and a partner of mine in both our firm's corporate and transportation groups. Chris has extensive experience handling and litigating complex employment law issues, as well as counseling our clients on all aspects of the employment independent contractor relationship, which is near and dear to our transportation group clients. We're going to lead off with Chris on the Families First Coronavirus Response Act. Chris, what type of leaves were supplied under the FFCRA? Could you outline and enumerate them for us?
Absolutely, Joe. And thank you for the introduction, and thank you for everyone attending. The two types of leave that the FFCRA provided for was the family medical or paid family medical leave under certain circumstances and paid sick leave. These became effective April 1st. So anything prior to April 1st, any leaves prior to April 1st do not apply, or these do not apply to, and it applies to any leave taken between April 1st and December 31st of this year. Also, it only applies to employers with 500 or less employees. The 500 employee threshold is going to be measured at the time the employee's leave is to be taken. So yesterday you may have had 501 employees. This may not have applied to you. Today you may have 499, and this will apply to you. Independent contractors do not count towards this 500 employee count. And then again, these leaves are not to be applied retroactively.
Hey, Chris, can you explain to us what is a qualifying event under the Paid Family and Medical Leave Expansion Act? In other words, when is it applicable?
Yep. So the Act actually added only one qualifying event. Qualifying event is a need related to a public health emergency. This means that the employee is unable to work or telework due to a need for leave to care for a son or daughter under the age of 18, relating to if the school is closed or place of care has been closed. And as well as the child care provider, being another parent, is not available to watch the child. In regards to teleworking, the employer determines whether teleworking is feasible or not. It's not up to the employee.
Chris, what are the eligibility differences between the FMLA, which some of our audience members may be more familiar with, and the new Expansion Act? Could you outline and differentiate those for us?
Sure, Joe. So under the FMLA Act, an employee would have had to been employed for at least 12 months by the company and have worked 1,250 hours in the 12 months preceding the leave. This act, or this part of the act, only requires the employee to have been employed for 30 calendar days. So it's a significant drop-off. It also applies to all employers with 500 or fewer employees. So, and this takes the place of 50 or more employees for each working day during each of the 20 or more calendar work weeks in the current or preceding year. So significantly cuts down the eligibility requirements for employees to be able to take this paid leave.
Hey, Chris, how do the payments of, the Family and Medical Leave Expansion Act work? Could you explain that to us, please?
Sure. So the first 10 days are unpaid under the family portion of it, meaning once we get to the sick leave part, which will cover the first 10 days, but the last 10 weeks of the paid leave are paid. So first 2 weeks unpaid under this portion of the act, the last 10 weeks are paid. The rate of pay is going to be no less than 2/3 of the employee's regular rate of pay. The regular rate of pay, for purposes of this act, is the average of the regular rate over a period of up to 6 months prior to the date on which the leave is taken. If the employee has been employed for the prior 6 months, the regular rate is the average regular rate of pay for each week the employee has actually worked. The paid leave shall not exceed $200 per day and $10,000 in the aggregate. So it's capped at $200 if an employer so chooses.
Chris, are the job restoration requirements under the FMLA different than those under the Paid Family and Medical Leave Expansion Act?
No, they're not. They're essentially the same protections under FMLA. Department of Labor has actually stated with regards to FMLA, but again would carry forward to this act, that an employee on leave is not protected from actions that would have affected him or her if the employee was not on FMLA leave. For example, if a shift has been eliminated or overtime has been decreased, an employee would not be entitled to return to work. At that time. If an employee is laid off during the FMLA leave, the employer must be able to show that they would have actually been terminated regardless. So if you had planned on firing employee X, you can still go ahead and fire employee X. You just want to make sure you have all your documentation in order, because you don't want to get into a retaliation argument, especially with temporal proximity of them being on leave or requesting leave. That's basically the timing of it.
All right, Chris, that makes sense. Now, so the FFCRA also provides paid sick leave. Now, could you tell us about what employers are required to provide and when they're required to provide it?
Sure. So again, 500 or fewer employees it provides. If the employee is unable to work again or telework due to a need for leave because, number one, the employee is subject to a federal, state, or local quarantine or isolation order advised by a healthcare provider to self-quarantine, is experiencing symptoms and seeking a medical diagnosis. The employee is caring for an individual who is subject to self-isolation or quarantine order. The employee is caring for a son or daughter whose schools or place of care has closed, or someone else is not available to watch their child, so another parent. There's also a sixth reason. This is really murky and it hasn't been clarified yet. It basically states that the employee is experiencing any other substantially similar condition specified by the Secretary of Health and Human Services. Nobody knows what that means yet. Hopefully they will give guidance. And I think what they're trying to say is look to the CDC for what a similar condition could be.
Chris, can you help our audience members understand how they'll go about determining how much paid sick leave an employee is entitled to and the amount of that pay?
Sure. So for full-time employees, it's going to be 80 hours of pay, which again, that would cover the first 2 weeks of the Expansion Act's FMLA leave. So here's your 2 weeks pay, and then you also get the 10 weeks of pay through the FMLA expansion. For part-time employees, it's the number of hours equal to the number of hours that an employee works on average over a 2-week period. So you're going to have to do some calculation there. For reasons of self-isolation, seeking a medical diagnosis, the pay is not to exceed $511 per day and $5,110 in the aggregate. For caring for someone else, or caring for your child, or because your child's school is closed, it's not to exceed $200 per day or $2,000 in the aggregate. An important aspect of this paid sick leave is that it's in addition to any other sick leave that the employee is entitled to. So employers cannot require the employer to use provided or accrued paid vacation, personal, medical, or sick leave before the paid sick leave is allowed to be used. Employers may also not require its employees to use the existing leave concurrently with this paid sick leave. The employees can choose to do so if it gets them to a higher amount. So if you cap it, let's say you cap it at the $200 mark because they're caring for someone else, where they might want to use their vacation time where they get $500 a day, they can go ahead and then use that time.
Chris, how about for employers with 50 or less employees? Is there a particular exemption from the paid sick leave and paid family and medical leave expansion act that you can outline for us?
There's a small business exemption. So basically, if it would jeopardize the viability of a small business as a going concern, a employer can exempt basically itself out of providing the paid leave. The reasons for this the reasons permitted to exempt yourself would be the provision of such paid leave would result in the small businesses' expenses and financial obligations exceeding available business revenues and cause a small business to cease operating at a minimal capacity. The absence of the employee or employees requesting paid sick leave or the expanded family medical leave would entail a substantial risk to the financial health or operational capabilities of the small business because of their specialized skills, knowledge of the business, or responsibilities. Or 3, there are not sufficient workers who are able, willing, and qualified and who will be available at the time and place needed to perform the labor or services provided by the employer or employees requesting the paid sick leave or expanded medical leave, and that they're needed to operate the business at a minimal capacity. Again, if you're going to go down this road with the exemption, you want to make sure you have documentation to back the exemption up, meaning you want to look at your most likely your financials to be able to justify the exemption.
Chris, I'm sure this is an important question to audience members. Is the government doing anything to assist employers in funding and underwriting the costs associated with these paid leaves?
Yes, they are. They're giving tax credits. So the tax credits are going to be credited against the employer side FICA tax liability with any excess refunded to the employer. So in other words, when employers pay their employees, they're required to withhold from the paychecks federal income taxes and and the employee's share of Social Security and Medicare taxes. The employers are then required to deposit these taxes along with their share with the IRS and file quarterly returns, otherwise known as 941s. Under the Act, eligible employers that pay qualified leave wages will be able to retain an amount of all federal employment taxes equal to the amount of the qualified leave wages paid, plus the qualified health plan expenses and the amount of the employer's share of the Medicare tax imposed on those wages, rather than depositing with the IRS. The federal employment taxes that are available for retention by employers include federal taxes withheld from employees, the employee's share of Social Security and Medicare taxes, and the employer's share of Social Security and Medicare taxes with respect to all employees. If there's not sufficient payroll taxes to cover the cost of the qualified sick leave and or child care leave, employers can then file a request with the IRS for an accelerated payment by submitting IRS Form 7200. So again, we talked about what the caps are. Those caps are directly relate to the tax credits. So for the FMLA expansion piece, the wages cannot exceed $200 per day and $10,000 in the aggregate for each employee. For the paid sick leave, depending on the reason the leave was taken, is capped at $511 per day or $200 per day. Employers are required to maintain these records to support each employee's leave to substantiate their request for the credits. You also have to retain all forms 941, the quarterly tax return, 7200, advance of employer credits due to COVID-19, and any other applicable filings made to the IRS requesting the credit.
Chris, in order for audience members to kind of unpack and digest what you just outlined, could you give some real-life examples as to how the tax credits would work?
Sure. So let's say that an employer paid out $5,000 in eligible wages or leave wages and is otherwise required to deposit $8,000 in payroll taxes. The employer could then use $5,000 of that deposit money to pay the leave wages, with the remainder of the $3,000 still being due on the next regular deposit date. Let's say an employer has more than what they're putting into the deposit, or they have more leave wages to pay or have paid than what's going to be deposited. So if they have $10,000 in leave wages and they were only required to deposit $8,000, the employer could then use all $8,000 to pay the qualified leave payments, and then they would file a request for an accelerated credit under the Form 7200 with the IRS for the remaining $2,000. And the IRS is supposed to, again, as they say, accelerate the payment.
Okay, thank you very much, Chris. If any audience members have any questions or need any clarification with what Chris just discussed regarding the Families First Coronavirus Response Act, there's a chat button on the side, the right-hand side of your screen. Feel free to send in a question, and I'll try to address it with Chris at the end of the speaker's presentation. At this time, I'm just going to then now turn to essential business-related topics, which Dave Strong is going to handle, and kick off my first question to Dave with this. Dave, could you help us understand how trucking and transportation firms could continue to operate during this difficult time period through the COVID-19 crisis?
Thanks, Joe. Yeah, for sure. I'm happy to be here this afternoon. Thanks for having me. And I want to thank all of our attendees for their time and attention this afternoon. Of course, trucking and transportation is the essence of an essential business. It's necessary to sustain the economy in general. It's especially necessary during this crisis to transport vital healthcare supplies and even healthcare workers to and from work. So trucking and transportation has always been essential to all of us getting through this crisis. There's even mounting sentiment to categorize grocery workers as first responders, and all of the all of the good things that go along with that or with that kind of a moniker. But if there was no trucking and logistics, there would be no supply to the stores. And so our industry is as important, certainly, as those workers. Now, as a technical legal matter, the way that the essential business orders work is they come out of the governor's offices in the individual states. And here in New Jersey, I think Governor Murphy from the outset did a pretty good job of never shutting down the trucking and the logistics and transportation industries. In his first essential business order of March 21, trucking and transportation businesses were simply not shut down. After that, Governor Murphy issued a more restrictive order on April 8th, but not only did he not shut down our industry, but he expressly noted that the transportation and warehousing industries were essential infrastructure businesses, and that means that pretty much our industry has been allowed to operate throughout this crisis as absolutely necessary to our efforts to combat it and to keep the economy going. Of course, even essential transportation and trucking businesses, Joe, are subject to certain safety requirements in order to stay open.
Thanks, Dave. Now, you mentioned the requirements transportation logistics businesses must follow during this difficult time period. Can you describe and outline what those are for us?
Yeah, absolutely. I think a lot of these are common sense, and I think a lot of our clients have already been doing this, and especially in trucking and transportation, it's doubly hard because you have a site, you have a location that's your primary headquarters, or you have your own locations, but you're also going to have people coming and going from your locations. And so you have to follow a number of different requirements that, again, that have been in place for a long period of time, but now, at least since April 8th and Governor Murphy's order in April 8th or on April 8th, these have to be part of your work environment every day. And that is, of course, all the social distancing things to maintain 6 feet or more distance at all times on the premises, to try to prohibit or limit non-essential visitors, to limit the size of workplace meetings and work groups to no more than 10, but frankly, it's probably less people if possible, to stagger start and stop times at work so that everyone doesn't arrive at the place of business at the same time and you have difficulty with social distancing issues. So make sure you limit the number of individuals entering and leaving the work site at the same time. Stagger lunch breaks if you can, and stagger start and stop times as well, again, to make sure that you try to enable safe operations. And remember, safe operations are very important, but utilizing the least number of individuals possible. You should also be restricting access to common areas such as restrooms and break rooms. Now, this is something that's happened in the last 10 days, and I think we're all doing it, and that is to require all workers and visitors to wear cloth face masks and gloves on the premises, and both the masks and the gloves must be provided to employees, at least at the company's expense. You also should bar access to anyone not willing to use a mask and gloves, but I'm not sure that's happening a lot these days. You also have to, as I think we've all been doing, require infection control practices, such as making sure everyone washes their hands, coughing and sneezing the right way, proper disposal of tissues and things like that. This sort of common sense stuff, but also you have to pay attention to limit the sharing of tools and equipment and machinery, and also frequently wiping down and sanitizing those high touch areas such as tools, equipment, and machinery, along with break rooms, along with doorknobs, and all the things that your employees are going to touch regularly. Also, employers now are required, Joe, to provide sanitization materials such as hand sanitizer and sanitizing wipes in the workplace.
Dave, I know you've been handling on a very day-to-day basis and in the trenches with many of our clients, trying to provide them with some practical tips. So let me ask it this way. Is there a right way and a wrong way to do all this?
Yeah, there sort of always was, but it's especially true since Governor Murphy in New Jersey, his April 8th order required businesses that remain open, such as in the transportation and trucking industry, to adopt policies and not just follow practices. So what we're doing is common sense, and I think we're all doing it both in our work lives and in our personal lives. The governor's latest order, in New Jersey at least, requires businesses to adopt policies, and in a compliance sense, really the only good policies are written policies. So again, even though we've been doing this for a while, we have to adopt a formal policy and write it down and communicate it to employees, to customers, to visitors, and so that no one can argue later that you weren't complying fully with the governor's order and with the nature of the crisis. Also consider writing down the policies in Spanish or in some other language if you have a predominance of that language in your workforce or in your visitors or customers. The policy should be posted at your workplace and also circulated and included in your employee handbooks. Also consider posting it on your website so that your customers know that you're compliant with all of the requirements, and also make sure you get the message out. However, the best way to do that is to your customers, delivery people, and other visitors to your site.
Dave, given the composition of our audience members, do you have any suggestions about any other considerations that would be especially related to their industry in particular?
Yeah, Governor Murphy, since his April 8th order, has issued a few more orders for our industry subsequently. Specifically, one of them is actually pretty good. He's allowed increased tonnages or weight limits for transportation of medical supplies. Also, he's attached some particular requirements to private carriers who might either work for New Jersey Transit or contract out to New Jersey Transit, or who are private carriers or who are paratransit carriers. And there are requirements that really relate to the same kind of requirements that retail businesses have, limiting capacity, making sure that you wear face masks, sanitization, all the things we've been doing. But actually in New Jersey, that's probably a pretty positive thing, because in Pennsylvania, I believe there's a charter bus ban, so that may not even be an essential business in Pennsylvania. So if you're running a private carrier operation, you need to make sure that you follow those latest requirements, Joe, in Governor Murphy's Executive Order 125.
Dave, finally, just in your opinion, what do you believe will be the effects of the recovery on the transportation industry in particular?
You know, Joe, we're all looking forward to coming out of this stronger. But frankly, I think the transportation industry, because it's been operating all along, will look very much the same. I think for a long period of time after we come back to opening the state and opening other states, there will be a continued requirement for heavy sanitization, for limiting telework wherever possible. We're limiting visitors. We're making sure people wear masks and gloves. And so I think that this is a good lesson for the transportation industry, because I think these additional restrictions, the good news is we've been allowed to operate. The bad news is that we've had these restrictions, and I think these restrictions are going to be ongoing into the foreseeable future.
Dave, thank you so much for the presentation. In particular, a lot of the practical tidbits and points that you made for us and for our audience members. Again, if anyone has any specific questions of Dave regarding the various topics that he just discussed, don't hesitate to use that chat button. Shoot me a question, and hopefully we'll have enough time to review that question or questions with Dave. Our last topic is on the PPP loan program. And as I'm sure everyone on this call knows, unfortunately, the first round of funding under that program, totaling $349 billion, dried up fairly quickly. In fact, I believe it was last Thursday, after the program was in effect for almost a week or so, there was no more funds. But I believe the topic is still very relevant. The latest news out of Washington is that it looks like the Senate Republicans and House Democrats have reached a compromise, working with Treasury Secretary Mnuchin and with the support of President Trump, and there's going to probably be at least another $300 or so billion added to that program. While I believe that a portion of that is going to be carved out for minority-owned businesses and rural small businesses, there still should be plenty of money available, at least for the next few days. So it's still a highly relevant topic for you, audience members who have either a loan that's in the works that was either approved and not funded, or would possibly like to seek and take advantage of the program. Anthony, I'm going to have you kick us off with a quick overview of how trucking and logistic firms can determine if they're eligible for a PPP loan.
Sure. Thanks, Joe. And thank you, everyone, for participating this afternoon. And we appreciate you attending. And I hope everyone is staying safe out there. So under the Paycheck Protection Program, which falls under Section 1102 of the CARES Act, in order for a company to be eligible for a PPP loan, it must be a small business that employs less than 500 workers. And the 500 workers includes a combination of full-time, part-time workers, and other types of workers. In addition to the applicable business, it must meet the size standards. So it's beyond the 500. It's also size standards for the relevant industry. And the size standard is found in the SBA regulations, and it's based on a company's NAICS code. So the size standard is defined as the largest that a concern can be and still qualify as a small business for federal government programs. So for the most part, it's based on volume of receipts that the company generates, and it's based over an average annual receipt of a firm calculated over a 5-year period. Okay? So in order to make the application, there are certain certifications on the SBA form application. An applicant must certify a few things. One is that the current economic conditions make the loan necessary to support ongoing operations. 2, that the funds will be used to retain workers and maintain payroll and or to make mortgage, lease, and utility payments. And 3, that the applicant will not receive another loan under the program. So you have one PP loan. So whatever that loan may be under the PPP funding, the maximum you're entitled to is 1.
Thanks, Anthony. Now, could you provide us with some guidance as to the amounts that would be available to PPP borrowers?
Sure. The maximum loan amount is generally the average total monthly payments made by the business for payroll costs incurred during the 1-year period before the date on which the loan closes, or for calendar year 2019 times 2.5, but up to a maximum of $10 million in funding. So what the company does is you lay out your payroll over the last 12 months. Most applicants are using 2019 calendar year, and you'll see on the application it actually tells you that you should follow the 2019 calendar year. It's not a necessity. You could go over the 12-month prior period, but 2019 seems to be the way to go because all your payroll records are intact. The payroll companies have everything at their fingertips in terms of providing that information. So you take your payroll and then you multiply 1 month of payroll by 2.5, and that's the amount of the loan that you're qualified for with a $10 million cap. Now, payroll costs, they're very generous in terms of how you define payroll costs. Payroll costs includes salary, wages, compensation, or similar compensation capped at $100,000 annualized for each employee. Also including payroll costs is vacation, parental, family, medical, and sick leave time, allowances for dismissal or separations, payments for group health care benefits, including insurance premiums and retirement benefits, and payments for state and local taxes assessed on the compensation of employees.
Anthony, are there any exclusions from the calculation of payroll costs? Could you explain that to us?
Sure. So there's compensation of any individual employee in excess of an annual salary of $100,000 is excluded. Compensation for an employee whose principal place of residence is outside the U.S. is excluded. Federal employment taxes withheld or imposed between February 15th, 2020 and June 30th, 2020, including the employees and employer share of FICA, are excluded. and qualified sick and family leave wages for which a credit is allowed under Section 7001 and Section 7003 of the Families First Corona Response Act that Chris touched upon a little bit earlier. So, and just one point on the compensation, to the extent that you've applied already for a PP loan, you probably completed a bank form Excel spreadsheet or some sort of calculator spreadsheet where they calculate the amounts. The $100,000 cap on the annual salary or the wages, that is a base number. So to the extent that an employee falls above 100,000 because of the cost to the employer, because of benefits, 401k plan contributions, coverage of healthcare benefits, that amount is okay to be included in the line item for those benefits. So in theory, you could have an employee who is at $100,000 cap in wages, and then you're getting also the credit for the cost associated with that employee above the $100,000 pure wage amount.
Chris, I want to take advantage and tap into your employment expertise and the issues that you've been navigating for trucking and transportation clients. And, as you know, many of our trucking company clients utilize independent contractors. Do independent contractors count as employees for payroll costs under this program?
No, Joe, they don't. Employers should not count independent contractors toward their employee headcount, much like the FFCRA. Aside from the employer-employee relationship issues and classification issues that counting them may cause later down the road if you are ever audited by the Department of Labor, independent contractors are required to apply for their own PPP loans. So they carved out a provision directly related to independent contractors. Joe, did I lose you?
No, we're Joe?
Chris?
Yep, I'm
Hello?
here, Joe.
Oh, I'm so sorry. I was on mute. I didn't want to interfere, but my follow-up question to that is, if a trucking company firm hires contingent workers that are here in the United States on various work visas, can the costs associated with such workers be added to the payroll costs in calculating the maximum loan amount that they would qualify for under the PPP?
They can, so long as the employee has their principal place of residence is the United States. This is determined by Internal Revenue Code 7701B. It's really the substantial presence test. This can be quite an involved process to determine whether their principal residence is United States or not. And if you need help determining this, we would suggest that you reach out to us after the webinar to go through that analysis.
Chris, what if a company utilizes a PEO? Do those employees count towards the 500 or fewer count that's required?
Yes, if the applicant wishes to include those workers in the payroll costs, they can. Payroll documentation provided by the PEO that indicates the amount of wages and payroll taxes reported to the IRS for the borrower's employees will be considered acceptable PPP loan documentation. Those employees, however, will not be considered employees of the payroll provider or the PEO should the PEO or payroll provider apply for a PPP loan. So they are your employees, not the payroll provider's employees, not the PEO, even though the PEO or payroll provider may be the ones issuing the check and their name may be on the check. At the end of the day, you're the one paying the employment taxes, the health benefits, all the other different welfare benefits, and possibly pension benefits as well.
Anthony, I want to pivot back to you. Similar to Dave with respect to essential business-related issues, I know you've been in the trenches and have been assisting our clients in actual loan applications. From just a practical standpoint, to kind of share with our audience members, what have you learned in speaking with banks and helping those clients attempt to get their applications submitted and approved upon their putting them into consideration?
Sure, Joe. So what was interesting to me is I started reaching out, when there was talk about the CARES Act and the PPP program, I started reaching out to a lot of the lenders that we had relationships with and just asking them if we could start making referrals of our clients so we could expedite marshal applications through. And the general response was, we're not taking on new clients in this respect. So it seems that most of the lenders were opening up the program only to their existing clients that have good relationships with the bank. So if you have an SBA approved lender, they were dealing only with existing clients. Also, most of the SBA lenders have an allocated amount towards the PPP. So they had internal limits in terms of how much they would do, So we saw that immediately banks like Wells Fargo had capped out, I think, in day one. And they were a little different because they were under regulatory compliance. They had some issues. So the SBA limited them to, I think it was $10 billion. But the other banks had set internal limits in terms of how much they would fund. And those limits were just flying off the shelves, right? So it was an immediate fulfillment of the bank's complete use of the funds that were allocated towards the PPP program. Also, having a good relationship is critical because to the extent that you have a good, solid relationship with your SBA lender, the funds are allocated based on a good faith review of the application in a reasonable period of time. So to the extent that the bank has the relationship with the customer, they were processing the loans much faster. They weren't possibly doing as much underwriting because they know their customer. So they were making the process as least painful for the applicant as possible. The better the relationship that the lender has with the borrower, the more confidence that the lender will have in the borrower's application and supporting documents. And that's also going to be a point on forgiveness that we'll talk about later on, because ultimately it's going to be the lender that makes a forgiveness decision. So you're not going to the SBA for forgiveness. You're not going to the government for forgiveness. The lender makes the decision on forgiveness. And once that decision is made, they go to the SBA where the 100% guarantee triggers on the forgiveness amount, and the SBA will refund the funds that were forgiven to the ultimate lender.
Chris, going back to you, given, again, your background and expertise, do the typical affiliation rules apply in determining the maximum loan amount under the PPP program?
Yes, they do, Joe. Essentially, businesses are affiliates of each other when one controls or has the power to control the other, or a third party or parties controls or has the power to control both. It doesn't matter whether that control is actually exercised. This matters if they actually have the control or can use the control at any point. The SBA regs point out four types of affiliations that would come into play here. It would be affiliation based on ownership. So if you own 50% or more, affiliation arising under stock options, convertible securities, and agreements to merge. Affiliation based on management, so if one party can manage the other, and affiliation based on identity of interest, which means if there's a close relative relationship between the companies. The affiliation rules are waived for any business concern not with more than 500 employees that, as of the date the loan is dispersed, is assigned an NAICS code beginning with 72. Any business concern operating as a franchise who's assigned a franchise identification code by the SBA, and any business concern that receives financial assistance from a company licensed under 301 of the Small Business Investment Act of 1958.
Anthony, let's say we're fortunate enough to get through the loan application process and you get a loan. What are the actual terms?
So the loan's going to have a 2-year maturity date and carry interest at 1%. There's a 6-month deferral period as to any payments, but interest will accrue during that 6-month deferral period. So you're not making actual payments of interest, but they're going to accrue during the 6-month period. There's no prepayments, so you could prepay it at any time to the extent you don't receive forgiveness, and there is no collateral requirement. It's a non-recourse loan as to the principals of the borrower, so there's no personal guarantees involved, and there's no fees to the applicant, which is a huge plus. Any SBA loan, to the extent anyone has ever applied or received an SBA loan, there's a lot of costs associated with guarantee fees and SBA costs, but here there's no fees to the applicant. The bank, basically, the lender, is earning its fees directly from a direct payment from the SBA.
Anthony, could you enumerate the requirements regarding how an applicant actually needs to use the PPA loan proceeds?
Sure. So the CARES Act provides that there are only 4 permitted uses, which they call allowable uses of covered loans. And the 4 areas are payroll costs, payments on mortgage obligations incurred before February 15th, 2020, rent payments on leases dated before February 15th, 2020, and utility payments under service contracts dated before February 15th, 2020. But, and it's a big but, 75% of the borrower funds must be used towards payroll costs in order to get forgiveness.
Anthony, what happens if the funds are not used for an authorized purpose?
So if the funds are not used for one of the 4 allowable uses, it really would trigger a direct repayment of those amounts, right? So you would have in theory, I don't think they're going to have the means to enforce it, but you would have a situation where the SBA could demand an immediate repayment of the funds, or the SBA lender could do that. If the funds are knowingly used for an unauthorized purpose, the borrower can be subject to fraud charges. Because remember, the certifications, we're certifying on the application that the funds will be used for one of those 4 purposes. If a principal of the borrower uses the PPP funds for an unauthorized purpose, the SBA would have recourse against the principal also. So they could pierce any type of corporate protection, pierce through the entity, and go right to a member or shareholder or principal of the borrower if the funds were used directly to benefit that individual.
Anthony, can you share with us the parameters for loan forgiveness? In other words, how does an actual applicant who receives these monies convert the loan into a forgivable loan/grant under the program?
Sure, Joe. So to the extent that at least 75% of the loan is used for maintaining payroll and the balance is used for making rent, utility, or mortgage interest payments, the borrower will qualify for loan forgiveness of principal and the accrued interest over a 6-month period. The forgiven debt will only be the cost incurred from the date of the loan through the next 8-week period. So from the date that you actually receive the funds through the next 8-week period, it's a forgiveness period. There's one big caveat. The amount forgiven will be reduced if there's a reduction in either the average number of full-time employees retained compared to the prior year, or the pay of any employee earning $100,000 or less in 2019, which takes a reduction in compensation greater than 25%. And in terms of measuring your full-time employee count per month, you can measure it during one of 2 periods, either the period February 15th, 2019 to June 30th, 2019, or the average full-time employee count per month from January 1st, 2020 to February 29th, 2020.
Anthony, to wrap up your topic, I'm going to ask you a final 2-pronged question. One, what's the grace period associated with the loan? And can you reduce pay or reduce employee headcount after the forgiveness period is over?
Sure. So reductions in employment or wages, right, that occur during the period beginning on February 15th, 2020 and ending 30 days after the enactment of the CARES Act, which would be 30 days from March 27th. I guess that would be about April 25th of 2020. You don't have a reduction if by June 30th of 2020, the borrower eliminates the reduction in employees or the reduction in wages. So if you replace, you rehire, you bring wages back to the pre-loan wage amount on or before June 30th, then you're okay. In terms of the reductions after the forgiveness period, there's no adverse consequence once you get beyond the June 30th date. So in requesting forgiveness, the borrower just needs to certify that the amount for which the borrower is requesting forgiveness was used to retain employees, the 75% piece, and to pay rent, mortgage, and utilities. So that if that pool of money is exhausted, or how it exhausted beyond that period, doesn't matter. The SBA is only planning on issuing, the SBA is planning on issuing additional guidance on loan forgiveness. So this could certainly change. But basically, what happens once you get beyond that June 30th date really doesn't matter. They're looking at the 8-week period of time, with the goal being to preserve wages and to preserve jobs. So just one thing in terms of the forgiveness: if you reduce, say you have 10 employees, and in the applicable period of time you reduce it down to 8 employees on June 30th, so you have a 20% employee headcount reduction on your forgiveness because you're down by 2 employees out of 10. But also, they look at that wage portion also. So to the extent that you have lost $50,000 in wages beyond 25%, that $50,000 beyond 25% is also going to be a count against forgiveness. So one employee loss can be a dual hit. You lose it on the head count and you lose on the wage portion. So it's really critical that you maintain those levels if you're seeking 100% forgiveness.
Thank you, Anthony. Appreciate that presentation. We have a few minutes. It's 2:52. A few questions have come in. It looks like the questions would be applicable to all 3 of the speakers. The first question, I think, Chris, is probably something you may address, but feel free, Dave or Anthony, to provide any color commentary. Chris, question from an audience member: which leave policy would apply if, per the CDC, a non-essential worker was exposed to a confirmed case of COVID-19 during the course of their employment? The CDC states 14 days are required.
So if they're in self-isolation, that would be the paid sick leave. Would be the first 14 days, and presumably they wouldn't need any more time than that. So they would exhaust their paid sick leave and not need the paid family leave. I don't know, Dave, if you want to add anything to that.
Yeah, the one thing I'd add, Chris, is that if the person is exposed, they need to get a doctor's note that tells them that they should be quarantined for that period. So they have to be directed by a medical professional in order to be quarantined and qualify for the sick pay.
Anthony, I'm almost positive this is something that you're going to need to address, but again, feel free to interject any of the speakers. Our company has let go several drivers, and now that we've received our PPP funds, we're reaching out to them to come back to work. A couple have stated they'd rather stay on unemployment. In light of this, how does that affect our employee headcount for purposes of loan forgiveness?
Yeah, that's a great question. So it really doesn't. You have to maintain those counts. So if you lost an employee because that employee was laid off and then they don't want to come back and work, it doesn't matter. You have to maintain the headcount. So you have to go find a replacement employee, to cover the employee and also to cover the wage within that 25% limit. So you may have claims, right? I mean, if the employee doesn't want to come back and they're taking unemployment, they're probably going to misrepresent or commit some sort of fraud, stating that they're unemployed or that you're refusing to take them back. So you have a separate issue with respect to their unemployment benefits, but for purposes of PPP counts, that doesn't matter. You got to replace the employee. The whole gist of the program is to maintain employees or to get people out there working. So they're very strict in terms of that.
Yeah, and I think overriding policy behind that is the PPP loan is actually cheaper for the federal government than the unemployment. So they want people to work under the PPP loan because they're paying that extra $600 a month or a week under unemployment.
That makes sense, Chris. That makes sense. Dave, I'm almost positive this is something I'd like you to address, but again, anyone can interject. I think it's being driven by a sensitivity on a particular audience member with respect to your typical medical privacy regulations that are imposed upon employers. The question being, it's a practical one. What can employers do to protect employees from the virus?
Another good question, Joe, and it's a question that a lot of our clients have had to deal with. Because a pandemic has been declared, most medical privacy regulations have been suspended with respect only to COVID-19. So you can ask your employees about their medical condition as if it relates to COVID-19 in a way that you can ask about other medical conditions. So employers can and should monitor employees for their symptoms and send them home if they're sick. Remember, there's not only a consideration as to whether they need to be paid or qualify for either the sick pay or the family medical leave, but also to keep the rest of your workplace safe. And that's one of the things behind telework. And certainly you don't want people coming in to work sick. So symptoms mentioned by the CDC include, of course, the ones we've all heard about: the cough, the sore throat, the shortness of breath, or trouble breathing. So I think you can also, if you wanted to, and certain employers are doing this, to take temperatures before allowing people to come into work. I know that's sort of intrusive, but it's allowed in this environment. Of course, absent the pandemic, you would not be able to do this, but you have to make sure that you're consistent and even-handed and make sure that you don't single anyone out. If you're going to do it, you need to do it across your workforce. So the temperature check is just one element, but in the stay-at-home instructions, I think you have to make sure that if you're, tell your employees, if you are experiencing these certain symptoms, that you should probably not report to work. And if you see anyone or observe anyone at the workplace, Joe, that is having those symptoms, you can send them home.
Okay, thank you very much, Dave. Well, listen, I just want to thank everyone for participating. Audience members, thank you so much for attending. We really greatly appreciate it. Speakers, you did a great job. I apologize about that one instance where I was on move, but other than that, thank you so much, everyone. And to the extent anyone who's participating in the webinar has any follow-up questions and would like to visit with us, any questions they may have or seek any clarifications, don't hesitate to do so and reach out to us directly. Thank you, everybody.
Hey, Joe, can I just add one thing for everybody? Hey, Joe?
Sure.
Yeah, I just want to add one thing. So to the extent that you have an application out there that was that you didn't get funded because the program had closed last week, just make sure, follow up with your lender to make sure that the lender has not capped out. So even if there's another $200 billion coming into the funding, you need to make sure that the bank has not made an internal decision. If they hit their cap, that they are not going to fund. So you don't want to be sitting out there thinking that you're okay with, Provident Bank, and Provident Bank internally has made that decision. They hit the limit, so they're going to close it up. So to the extent you could do that immediately before the funding comes out, that's going to be important. And a lot of these banks have opened up portals with third-party lenders. Cabbage lending is one of them that we're seeing a lot of. So, they may direct you elsewhere, but just don't sit back and wait, assuming that your bank's going to get this through now with the additional funding, because that may not be the case. Okay? And good luck, everyone.
Good point. Thank you very much, everyone.